Hi, my name is Gaurav Shivpuri. I head the capital markets business for JLL. Investors in the region now are looking at education-backed real estate as a viable investment asset class. Predominantly, this is coming from asset managers, sovereign wealth funds, and institutional investors. The availability of product has changed that. A lot of education providers are now looking at sale and leaseback as a viable funding mechanism to raise new capital. Hence, the product availability has increased. At the same time, it's an asset class that people have got to understand a little better, and that's helped in their investment decision making. The GEMS transaction is well documented, but there are a couple more that we're working on which will demonstrate that there are other players who are active in this space. Education is considered to be a resilient asset class, especially in recession. Apart from that, their secondary locations generally tend to drive higher cap rates, which is more interesting to investors, combined with a long-term lease. Hence, you see more interest for investors who are looking at solid long-term leased assets as compared to doing more conventional asset classes like offices or retail. The net initial yield for education range from 8 to 8.5%. The sale and leaseback or build-to-suit funding is an attractive way of raising new capital for education providers and allowing them to reinvest that money in their core business where the returns are much superior to real estate. For the sellers, it's an opportunity to raise new capital for growth in an environment of rising interest rates and lower debt liquidity. What we offer to the market is ensuring that we structure the transactions appropriately from a risk-reward perspective to create a more sustainable transaction for both the buyer and the seller. I expect to see a lot more of these transactions in the coming few months as the liquidity in the market remains tight. We are working on a few transactions which hopefully we'll announce soon.